The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, testing here. Looking good, Billy Ray. Feeling good, Lewis. Are we on point? Are we on point? There we are. Okay, there we go. Looking good, Billy Ray. Feeling good, Lewis. Okay, let's take a look here this morning. We're going to go through a bunch of things. We got a couple of things happening that look pretty interesting anyway. Let's start out with the DAX like we always do. We'll just look at the 15 minutes because we all know that the DAX is still up there near that old high. So we'll put this up here to take a look at it, and then we're going to get on to some of the other things that we like to look at. You'll see it's up here against that 78% level at 13,000, probably on its way to 29,000 like all the other markets. So we'll wait and see how some of these things line up. Okay, folks, let's take a look where the pedal meets the metal. We want to be watching something very closely. Yesterday we talked about the gold market. Let's get this up here so we can take a quick look at it. We were looking at this gold market up here at this 1308 level. The reason why is that we had a 1.618 expansion there. You'll notice the ABCD pattern over the 11th to the 16th. This was pointed out to us by our good friend Mr. Z here in the den. And what we were looking for is around this 1291 level. We had a 78% level retracement from the 11th, plus we had a 382 retracement from way back on the 6th, and then we also had an harmonic number, which it was down $17. What's happened so far, however, is we have gone through that level, and we are heading down a little bit lower. We got down to around $12.85, so it's about $6 lower. Usually risk about $8 on a gold trade. But let me show you what I was looking at. I was doing this in the middle of the night as well. I might as well show you what's going on here because I wanted to show you the relationship here between the euro and the gold because the correlation is extremely high. So here's what I was watching. Take my 2 cents and spend it on a piece of candy or something. Anyway, if you'll notice the top chart is that euro. That's the one we've been watching for a correction to come down here to this 117.47 level. We just hit it just a few minutes ago, 117.47. That completes that ABCD. It's spot on the 61% retracement. You'll notice here on the lower chart in the gold that we were already below the 1291 level that we were watching to see if it would hold. You notice it held, rallied a couple of dollars, and then went below it. My assumption was it was waiting for the market for the euro because the euro is thousands of times bigger than the gold market, folks. There's not even a comparison. That it's probably waiting for the euro to bottom before gold is going to bottom. Now, I don't know if that's right or not. That was my assumption. That was my thinking. So far, it's been right, but, you know, that might only last for about 30 seconds. But anyway, that's what I was watching. I was looking at the correlation between those two markets because it's been so very strong that I wanted to see if there was a possibility of that occurring. I did buy the gold down there at the 1290 level. It rallied a couple of bucks, and I put my stop at break even because I thought it was going to rally a lot more, and I was worried about this euro at the 117.47 level to get there. And you'll notice we were still 12 pips away. Now, 12 pips in the euro doesn't sound like much to you, but that's 112 clams, folks, U.S. dollars. So I wanted to get the best possible entry if I could, and so far that's what I'm looking for. I went long the euro at 117.47. Those of you that were able to attend the seminar last night, from the webinar last night with John Jameson, the one thing you're going to come away with is the fact that the euro has a very strong tendency to make highs and lows between 9 and 10:30 every day. And here we are coming in at almost 9:30 right now, and we should be looking for a low in the euro based on what John was looking at as far as the type of pattern that we were looking for a market to make a turn on that type of thing. Now, what John does is he does a lot of things, with the trading day of the month. And one of the things you want to take a look at here, we'll just put this up here and show you what we were looking at. Here is the situation for the euro, showing that, look, here we are. This is the 17th of the month, and bada bing, bada boom, there we are. So this maybe won't work this time, but this has got the Fibonacci level coming in that we like, and it's also got the positive trading day of the month, which could be good. So you add this up, and that's why John was talking about when you do these trades, you have to add up all the probabilities in order to get a positive expectation. It's no longer coin toss, because then you have something that is working in your favor. He did I really enjoyed this stuff because it's numbers, and I try to understand that. But you got to spend some time learning it and proving it to yourself. Otherwise, it doesn't. There's only 22 trading days of the month, Mr. Bill, and I'm going to explain this to you because this is very important. There's no extra charge. We don't trade on Saturdays and Sundays, and that's where we get to 22. Okay, I was just being facetious, Bill. Anyway, okay, let's move on here. And sometimes it's not even 22. Sometimes it's only 20. And I think in February's, let's just look up here. What do you have here? 22. He said, look at the chart. Let me see what he have. It's 22. Yeah, there's 22 trading days. Yep, that's what it is. Those are the trading days of the month is what it is. So anyway, let's just move on here to the next one here, see if we have any other questions that we have on that. Okay, whether it works or not, I don't know, but we're going to keep an eye on it. The gold has some support down here at the 61% retracement. Is down quite a bit lower. That would be down around this 1270 level. I really don't want to hold gold between 1285 and 1270. The most you want to risk on that is $8 max, and hopefully, $5 or less if you try to time your trade, a little bit better. So what I'm doing is I'm watching gold, and because it has a strong correlation in the euro right now, I'm watching the euro bottoming possibly around between 9 and 9:30, quarter of 10. Gold at a pretty good price at that point. Then we're going to be out and be able to see what is going on. Anyway, maybe Bill, you are absolutely correct. You're absolutely correct. I did that wrong. Very good. I am sorry. I just saw the 17th and I thought it was that's why you get the big bucks, Mr. Bill. Sorry about that, folks. My bad. Thank you, Bill.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, this is the euro that we're looking at here since early October. You'll notice the dotted lines on the left. That showed the ABCD structure to the downside. That's basically a 3 drive to a bottom that we've shown several times before. And all I did was I transposed the dotted line over to where we are right now. You'll notice that the 61% retracement comes in at 1249. And so actually 1248, 1249, somewhere in that ballpark. And that's what I was watching for this morning to see if this is going to be a retracement trade where we're still in an uptrend, of course, in the euro, especially since, the 6th of October. This is the first good ABC since that time, so maybe it's a good buy, maybe it isn't, I don't know. John Jameson pointed out that the euro has a strong probability of making highs and lows between 9 and 10:30 in the morning in the Eastern time zone. We also looked at stuff for London and things that were all, very, very interesting too. By the way, John was doing this seminar in the midst of Hurricane Miss Ophelia from Trading Places, Jamie Lee Curtis. And if you'll see when I was talking to him on Skype, I could see the trees outside of his flat, and they were bending in half. I mean, it was really something to see 85-mile-an-hour winds. We've seen so many hurricanes lately that it's becomes almost commonplace. Okay, now let's take a look at one other market that we want to pay attention to that we were going to be talking about today, and that is Netflix. Here is the chart that we were looking at yesterday for Netflix. Let's just get it up here because someone's asked us to review it. We had the earnings come out for Netflix, and as you can see, we were expecting possibly the previous high had been at the 1.27, but we had a really strong ABCD pattern. In fact, there's 2 ABC patterns, as you can see right here, and you'll notice that the high up there at the 1.618 level comes in at 209. So the next thing that we would want to do if we were looking at Netflix would be to go to a smaller time frame and take a look at it just to see if in fact we got to that level. So what I've done is I've gone to a hourly chart, and I believe it's an hourly chart. Let's put it up here. Yes, it is, and you'll see here that I've put in both of the ABCD patterns, and they measure right up here that it's they actually hit 210 is what it hit. And yeah, it did hit No, 209 and change. It didn't get to 210. Anyway, that's a 1.618 expansion on the daily. And so that should be it for Netflix. It should have a pretty good correction from this level, but this is the target that is shown. And, many times these things go far, far above the targets, as we've seen in some of these other markets, which will be nameless. Anyway, that's what we're watching in Netflix, so it probably should have a pretty good idea or have a correction. By the way, this is one of the markets that if you got a lot of money, you can enter these markets. If you can get production companies and all the advertising, so they're going to have some a lot. Well, Amazon's already given them some heat, but there's going to be other people coming into it. Disney and a few of these others that have a lot of money, they can get in and maybe squeeze them a little bit. But at $10 a month, as Tom O'Brien says, everybody can spend $10 a month, and that makes it a whole lot easier. So let's just watch that, very, very closely. By the way, on that gold, the 50% retracement of that move from September, from October the 7th comes in right around the low today at 1285. So that would be very, very important support here. But what I'm doing is looking at the time frame, because I enjoyed what I heard last night from John, and then I'm watching it, and so I got the time and the price and the Fibonacci and the other things that I'm looking at. So it certainly makes it look like there's a possibility that there could be a situation where the market may be making a bottom, at that time. It just looks very, very interesting. Here it is again on a little bit longer time frame in the euro, switching over to the euro for just a second. I hope I can. Just a second here. Yeah, I can. Just give me 1 second here, and we'll be able to get this right here. There's the 3 drive to a bottom on October the 7th, and now you see where we are right now. You also have a little 3 drive also coming in at the same time on the euro at that point. That's why that 117.49 level was so very, very important. So that's important. Yes, Marshall, his time frames were extremely important, and believe me, folks, he has looked at everything in the E-mini S&P ever since it started trading back in April of 1982. So he's looking at about 7,000 different patterns. And one of the things that got me interested in doing the webinar with John was the fact that he used this opening price effectively. And not only that, but it verified these harmonic numbers that I've talked about before in my books, like the 5.5 and 3.5 in the S&P, and they certainly have been proven out with all the data that he has. And that's why when John trades these things, his maximum risk is about 3.5 points in the S&P. And some of the statistics that he showed was quite interesting. A lot of numbers, but I like numbers, so it was very interesting. All I'm trying to do, folks, is just to add the statistics together. My next step will be going to the 200-day moving average, crossing by the 50-day moving average. I'll be doing a special seminar on that on the 32nd of October. So I hope you get a chance, to listen in on that one. Let's get back to the euro for just a second here on a little bit longer time frame here. Let's just look at this on a monthly. Someone's asked us to take a quick look at it because there is a chance that, we might have made a really significant, Well, Mr. Bill, if you look out over the sunset, you'll see those 2 riders on that hill right above your house. Those are the Chance brothers, Slim and None. Fundamentals I won't go to. So anyway, I was joking about the moving average too. Anyway, let's take a look, and I shouldn't, because some people can use them with great expertise, like we see with Steve Rhodes and also Tom, and also especially Basil Chapman, who does a superb job with it. Let's take a look here at this euro. What we were looking at here at this 121 level was a 50% retracement of the high from 2013 and a 38% retracement from the high in 2010. That's what we're watching right there. And what we're looking at potentially is the market to pull back to this 113, 114 level where it broke out from. The reason reason why I'm saying this is if you'll look at this cycle that we have in here, it's about as perfect a cycle phenomenon as you can see. You can see the long cycle, which is a 16-year cycle. That could be a 16-year low in the euro. Now, look at the last time we had a 16-year low in the euro. That was when my grandson was born back in 2000, and that had a huge move, a big ABCD that took it up to the 160 level and then back to 102. So just keep in mind, by the way, back in 85, there was no euro. What they're doing there is they're using the Deutschmark as the thing. The euro didn't really start until 99, I believe. And maybe 95, but 99 is when it first started. They first started printing their currencies and their coins and stuff. So that's an interesting thing. So we'll take a little break here, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look at the Treasury bonds here. This is where we were coming into this week. You notice this 154.08 level was some very strong resistance. We had the 20-man line there that you see extended way back from May the 8th. coming in right at the 78% retracement from the high that we made in September. This would suggest that we were probably going to have a little bit of resistance. That's really what we were watching here. So what we want to do now is to go down to a smaller time frame to see, what's really happening here, with the bond. So if we bring this up, you'll be able to see here on the 60-minute chart, we'll see it a lot easier. By the way, one of the things that you want to do is when you're trading, folks, if you're trading a daily chart, you've got to focus on that daily chart. If you're trading a 60-minute, focus on the 60-minute. If you're trading a 15-minute, trade the 50-minute. You get into a lot of problems, folks, if you shift back and forth between time frames. Two things happen. One is your frame of reference gets off a little bit, and the second thing is your risk-reward ratios change dramatically. And focusing on the risk, because you don't know what the reward's going to be, but you have to focus on what the risk is at any one time. So, pay particular attention to that. I think it's very, very important. Now, if we take a look here at the hourly chart, I want to get this up here so you'll be able to look at it. Okay, there we go. There we go. Okay, here's the ABCD Gartley that we had up here at this 154.0607 level. Now what we've done is you'll notice that the retracement that we've had over the last 3 days has been exactly equal to the retracement that we had on the 10th and 11th. Notice that was exactly 1.5 handles. So let's change that number again, Larry, to make it 1 handle, not 1.5. So it's about 1 full point in bonds, making that correction, and that's pretty much what we're looking at right now. As of today's low, which is around 153.08. I'm expecting to get down a little bit lower, down to probably the 153 level, which would be the old high that we had on October the 10th, and that would also be a 20-minute line, drawing it from October 4th through the 10th. That would really be an interesting one, to pay attention to. So there should be some strong support around the 153 level in the Treasury bonds, but longer term, folks, they look a whole lot lower. That's basically what it looks like. So that's what I'm watching. I'll get to the stock market in just a minute, but I wanted to make another comment about the Bitcoin. Someone's asking another question. Folks, it looks to us, and I mean myself, since it's just me, let's just put this up here, and we'll just bring this up here so you can see it here a little better. This is the longer-term chart on Bitcoin, and you'll see that it has a target of 6,200. And we're trading at around 5,500. That's only 700 points away. And the way Bitcoin trades, it could make that by the end of the day or sooner. So we'll watch it when it gets to 62 just to see what happens, just because we want to follow the patterns. Because when the patterns fail, that's telling you something that I think is very important also. It's extremely important. We've had a question from one of our listeners about the chart of Apple, the long-term chart on that. I'll bring it up. I still believe, folks, that Apple has made a major high that Mr. Bill, Walter isn't my advisor. No, I use a psychic from Dr. Theo Tigerdew from Bombay is my spiritual and psychic advisor on stocks and commodities. Unfortunately, he's been in Timbuktu, and I haven't been able to reach him for the last 13 years. Anyway, look at Apple here on a long-term. I'm not on medication, folks. I'm just tired. Let's take a look here at Apple on a weekly basis. You'll notice that we've had these two major 1.618 expansions spot on, stopping at 165. If you believe the 1.618 in 2015, before it dropped $60 a share, you got to believe the one that happened at 165, and look how it started. It started the same way. So if Apple gets above 165, I'll have to get to the Dr. Tigerdew and ask him what the next step is. But right now, this is a major completed 3-drive pattern that means a whole lot. That's basically it. And That's pretty much, you're right. Let's take a look at that same 3 drive pattern a different way here. This is the Dow Jones Transportation, and hold on here 1 second. There we go. There's the same 3 drive pattern. This is only a daily chart, whereas the other one was a weekly chart. You see the big reversal that we had in the Dow Jones Transportation. So that means that there's probably a pretty good correction coming. We see one other market that has been not acting very good from a technical basis, and that is the Russell 2000. I'm going to talk just a little bit about these indices here. Folks, I know you look at these indices all the time, but on an open interest basis, by far, the E-mini S&P is the best one to trade for open interest because it is over 3 million. You know, you're not going to believe this, but in second place is the IWM. Well, not the IWM, but it's the Russell 2000 futures. That's at 500,000 open interest. Then we go down to the NASDAQ, which is 250 or 60,000 open interest, by the way, which has been decreasing each day. In other words, as this market goes up, more shorts are covering, new longs are not coming in, and believe me, folks, that spells vacuum any way you want to look at it. And then the third one, of course, is the Dow Jones futures that has an open interest of 150,000. So that's why when you have these thin open interests like we do in some of these, you know, it doesn't, you know, it's really quite unusual. When you look at the foreign currency markets that trade billions and trillions in the euro, but billions in all the others. I mean, these markets are so big compared to these stock indices that's why, you know, the indices look so much better. I mean, the foreign exchange looks so much better from a trading standpoint, and that's why I like him so much. Anyway, we'll see what's going on here. Okay, let's move on to the next question that we had. Someone's asked a question about folks, open interest. When open interest goes up and prices go up, the market is very strong. If open interest goes up and prices, if open interest goes down and prices go up, people are leaving the market. So shorts are leaving the market because they're buying in to cover their position. And that usually leaves a vacuum. We've seen this in many markets that we've talked about here before, and we've got to pay attention to this one because this is it's not a big market. You know, with an open interest of only 250,000, that's not much, especially when we look at some of these other markets. So that's the main thing. I want to mention one other thing that was, we got the break coming up already. Wow, time really goes fast when you're having fun. When we get back, I want to talk about liquidity in some of these things because I heard somebody, a university professor from Yale University, talking about liquidity, and I didn't agree with 1% of what he said. And we'll listen to that in just a minute. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I'm going to give you a little bedtime story going back into the early 2000s. When I was at Drexel, I had a couple of professors from Pepperdine University up in Malibu, and we did well, basically because I was buying gold and silver as they went up. But later on, as I started giving some speeches, the university would let me speak to their business degree, their master's degree program there. And so I would speak there every quarter. And each time I talked, it would be about the markets in one particular market that we would be following. And I would go through the Fibonacci, the usual stuff that I talk about here and in the books and stuff. But this particular time, I'd been doing this for about, 4 or 5 years now, so I've given probably 15 talks over that time, and this was March of 2000, and we were in early March. Market topped in the NASDAQ on the 24th. I believe it was the 23rd was a Friday, 24th was a Saturday, because they had the big money show up in San Francisco that next weekend of the 24th and 25th of March. But as I gave the talk that Friday, no, it wasn't on a Friday. It was a Thursday, because then I flew up there on Friday. So it was a Thursday that I gave the class talk, and I happened to be noticing that there were a couple of suits in the back of the room. In other words, some of the professors, a couple of professors back there, and they were on the board of regents, and they wanted to hear my prediction on what the stock market was, and I was extremely bearish. I mean, I was more bearish. Well, we're equal. Anyway, I was just showing him all the patterns that we're completing and the fact that we're in this dot-com bubble that we would not see again. And all of their portfolio, not all of it, but 70% of the portfolio for the university was tied up into NASDAQ stocks. It was being controlled, actually not controlled, but it was being managed by Bear Stearns. And it was really, it was March of, I believe it was March 22nd is the day, 22nd or 23rd is when I gave the talk. It was from 7 until 9 on that day, and then the next day I flew to San Francisco for the money show. Anyway, that's neither here nor there, but what happened was I was just really, I presented a lot of things and everything. Yes, it was March 22nd of 2000, as I recall. It was the 22nd or 23rd, Duffy. I'm not sure of that. And I was just really extremely bearish. And all I told them was, just be real careful here, because if we go below the low of the second week of March, that would be an incredibly bearish phenomenon. And I showed him 3 examples of that. And what happened was those 2 gentlemen were actually pretty influential with the regents. And so what they did was they liquidated 50% of their of the NASDAQ stuff that they had in that when it broke that second week. And of course, it never looked back. And when it broke the monthly thing, they got the rest of it, and they saved 92% of the money that they would have made. And that was they were very happy about that. They sent me a very nice gift, and then both of them went to work on Wall Street. So go figure. Anyway, that's what happened. There was a lot of memories in there. But tomorrow is going to be the memory lane. You don't want to miss tomorrow, folks. Tomorrow is memory lane because this was a Saturday on 1989. I had just cashed out my puts. The Dow was down 160 that day. 106 points that day. It was only trading around 2,500, so that was quite a bit. And I was able to pay some nice tuition to the East Coast, and it was really a lot of fun. But that Saturday, which was the 17th, the next day on Sunday, there was going to be a very big wedding in Los Angeles on the 18th at the Beverly Hills Country Club. One of the market wizards was getting married, and it was from the old Drexel days. Both of my daughters were going to go with me to the wedding because they had a lot of friends that they grew up with that were still in their 20s now, and so it was a lot of fun. And I'll tell you the story behind it because it's really exciting. And of course on the 19th was the big crash day. Anyway, we'll do that tomorrow, so we have some things to talk about, a little bit different than the usual stuff. Jack Schwager wrote the Market Wizards. Jack Schwager, Schwager. And, when he contacted me, I never should have been in the Market Wizards book for sure. But he asked me if I wanted to be in it, and I said no, I wasn't in that class. But he was a class guy, still doing well, and it's very very great. Anyway, we'll talk more about that time frame of October 19th tomorrow, especially the 18th, because that was a very, very exciting time. Won't take very long, but we'll get through it okay. All right, let's just look here at the markets, what we're looking at here. We got a break coming up in just a minute, and just double check what we're looking at here. We're a couple ticks below here. We're right at the time now in the euro. This is the time that John Jameson said we should start the bottoming process between 9:30 and 10. So here we are at 117.43. The fib number is 117.47. That's close enough for government work. So just sort of watch it, and then we'll see, what happens with it, from that point. Also in the gold at 9:30, it was trading at around 1286.50. If it gets below 1285, I wouldn't touch it. So you're only risking $1.50 there if you're looking at that. And then I would just aside and see what's going on, with this thing. We've bounced a little bit, about 20 pips in the bonds from that little bit level, but that's still very, very early in the day. The main thing to watch here, which is the big one, is the euro, because that's the one that is sitting right at the proverbial moment of truth in here, with time and price coming together, if it's statistically right this time. And remember, these are only probabilities, folks. These are never certainties. So just remember that that's a really big thing to keep in mind. It's all about, probabilities. It's no certainty in any of these things. The only person that's certain is God, and she only trades about twice a year, and she never tells us when she's actually going to do it. So we'll watch it very closely. This number in the gold that we're looking at is very important because of this long-term weekly chart that we have in gold that we believe has made this really important 61%. Oh, let's get it down here. 61% retracement down there at that 1268 level. And we had the first little rally back, and we looked at it short term, so we know what that is. Now, the pullback here is going to be the important thing, because if we get below 1285, that sets up 1270. And 1275, and below 1275 means this rally high might have been a bear market rally, and that's the kind that you have to wipe the face and say, better look at something different. But anyway, that's what I would be watching today in this gold is at 1285 level very closely. Put a stop at say 1284 just to be safe. It's a $2. And then watch this euro. The euro is right at the moment of truth, as we say. We're at the 9:30 time frame, and statistics say that there's a high probability that the euro would be bottoming here around this time. So whether it does or not, I don't know. It's just that it's a statistic. That's all it is. Okay, we got a break coming up here, I guess, and then we'll get back and we'll talk a little bit more about the stock market, particularly the NASDAQ, because it's an interesting one. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I want to put up the chart here of the NASDAQ. As you can see here, this is a daily chart. What's important here, if you'll look at this cycle time frame that is there, that shows you that we're looking at a spot in the market where we're right at a really interesting spot for time up equals time down. You notice from the low to the high has been exactly 15 trading days, and today's the 15th trading day. So pay attention to that. Maybe it means something, I don't know, but the pattern longer term certainly gives a pretty good indication that something is interesting. So we should watch that, if nothing else. And I would think that the market could possibly be overbought just a little bit, especially since we have the greed index at 162. It passed 161 yesterday, and it's on its way to 350, but that'll be in a later date, probably around the 1st of November would be my guess. But anyway, don't miss tomorrow's show, folks. I've got a lot of memory stuff from the 18th, 17th, 18th, and 19th of 1989, and it's just a lot of memories coming back. So another thing that's really amazing to me, folks, is it's very hard to see the Yankees play the Houston in the championship series. There's no major network covering the championship series for the American League. They are for the National League with the Dodgers and the Cubs, of course, but not for the Yankees. That just seems hard to believe, being one of the most successful sports franchises in all of history. But I guess that's the way things go at Disney or wherever they have it at ESPN, is what they're looking at here. Pay attention, folks, because we're at real critical levels here in the euro and the gold. That's pretty much the bottom line. Pay very, very close attention to that, because failure of these means we're looking at much lower prices in both of these. That's the bottom line that we're looking at. So keep in mind. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.